Good morning, everyone, and Happy New Year. Welcome to LiveHire's quarterly activities report for Q2 2024. My name's Ben Brooks. I'm the CFO of LiveHire and the moderator for today. I'd like to introduce the panel that we have talking to our results, starting with Christy Forrest, our CEO, and Andrew Rutherford, our non-exec chair. Just some housekeeping with regards to the presentation. The webinar has been recorded, and the report PDF will be sent within 24 hours. With regards to any questions during the presentation, please just do it through the Q&A functionality at the bottom. And with that, I'll hand over to Andrew for the chair.
Thank you. Ben, just for noting, I can only see the slides. I can't see any of the presenters on screen, so I'm not quite sure if that's by design. I'll leave you to play with that. Thanks, Ben. Good morning and welcome, and a belated Happy New Year to everyone. I hope everyone had a chance to use the holiday period to rest and recharge. I know I did. I wanted to make a couple of comments before handing over to Christy. Over the quarter, we have continued to execute on the strategic reset plan with both discipline and rigor. The team have been very busy over Q2 and even over the summer. Cost control continued to be an absolutely key priority for the business, and we expect to see continuing edging down of costs as the full benefit of our premises rationalisation and headcount reductions are realised. And I want to put a pause on that for a second. The level of cost control that we're executing the business is really tight. Just as a small example, our Zoom subscription is coming up this month, and the team have decided that we're not going to continue with that Zoom subscription, and we're going to save that money. Instead, we're going to use the embedded capability within Teams and Google Meets. But it just shows you the level of detail that our cost minimisation efforts are going to. And I kind of make that comment in the context of we continue to receive feedback and suggestions by various people and shareholders that we should be appointing new directors, new consultants, and whatever. And we are running a very, very tight board, and that's purely because of the cost. And we recognise that from a pure ASX corporate governance perspective, it's suboptimal. But when we are running the business so tightly, and when we are so focused on costs, adding another director and the costs that go with that is a non-trivial item. And again, in the context of Christy being paid only half of her contractually entitled salary, reading the room and adding those sort of costs is, I think, a pretty challenging conversation. So that's why we're not doing anything on that front at the moment. So we're running very tight, and I do remind shareholders that the costs of us remaining listed are approximately $100,000 a month, and that's pretty significant in the context of this business. Our operating cash flow for the quarter was positive for the first time, ding, 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 and total cash burn was consistent with our forecast. Our operating cash flow for next quarter will be negative $1 to $1.5 million due to timing issues associated with annual expenses we pay in the first quarter. One-off costs such as a make good on our Sydney premises that we'll be paying out in the next couple of weeks, and the removal of the one-off upfront 3-year payment from an Australian SaaS client that we received last quarter. So that volatility in cash flow is expected, and the expected cash burn for next quarter is consistent with our internal forecasts. And that forecast points to a sustainable cash flow break even by the end of calendar 24. However, this does remain subject to both growth in existing clients as well as new client acquisition. And to give you a little bit of colour on that, about 50% of our forecast revenue uplift comes from existing clients ramping, and the rest coming from new sales. We think it's sensibly conservative, but it's not without risk. The new pharmaceutical client we signed through TapFin during the quarter was further evidence of both product market fit and TapFin's strong support for LiveHire. We would like to build more clients that were being signed, and we continue to be very focused on that goal. The integration with Beeline that is now complete has been rolled out within our TapFin ecosystem and will assist with longer-term momentum, but does cause a little bit of a disruption over the December-January implementation period. The signals coming from our major market in the US continue to be mixed, and this is tempering our own outlook on revenue growth within existing clients, as well as new client acquisition. The lighter loan that we entered into during the quarter was entered into for prudence and to provide some insurance against some of the uncertainties we face, both at a macro level, particularly in the US economy, and at a micro level, for example, around new sales. Cash outflows on this loan from repayments will be approximately $500,000 next quarter. And we've put that into the previous announcements. That management team are continuing to manage the business with a laser-like focus towards break-even, as shareholders and the board expect. Thank you, and over to Christy to provide some more depth and context.
Thanks, Andrew. I'm sharing screen now, so just want to make a check that everybody can see this.
Yep. Thank you.
Wonderful. Great. This was in the quarterly, and we're really excited to be at this point because we've been rebuilding this ship while it's sailing for almost a year now. And it's the kind of diligence that Andrew is referring to, and just this very, very steady attention to the key levers that we set out that we take very seriously, that we're marching against. And in this quarter, we achieved some really critical milestones that we're actually quite proud of. And it's in our plan to reduce the cost base down 42%, reduce the cash burn. So it was a cash flow positive quarter for the first time ever. And delivering on partner strategies and scaling revenue in our direct sourcing clients in particular. So this was a really important moment for us to consolidate a lot of the effort that's been going in over time, and it truly is a moment for us to see that things are working. And so as we face off with the environment that we're in and continue to execute our own plans, I wanted to share a little bit about what we're seeing in the way of the macro trends and with our partners, because they're such a critical part of our strategy. What is our own momentum and efforts that we're putting toward driving that closing of the gap in the revenue growth that Andrew referred to. So as we start to tighten between the cost base and our revenue line, and we see that gap closing toward our path to break even, which we're very clear on. We understand what it takes to get there, and we have line of sight. I do want to share a little bit on the Indigenous Hiring Initiative. We've done some work there on the concept. I want to share what that will look like and give you a sense, an early indication of some of the feedback. And we'll highlight the slide that Jennifer had put into the quarterly, which is a great summary of the incredible work being done by that team too, and some questions that investors typically have for us around AI. So it's important to note that we're not seeing a major shift in the macroeconomic environment. So hiring, which is an important indication for our whole business, but which keys into our North American business in particular through the revenue line, is still down, particularly in the temporary help. And you can see here the staffing industry analyst perspective at the bottom. They track every single month how many jobs are being added, and at the broader economy level in North America, there are jobs being added, which is great. At the temporary level, it's been going backwards for some time, but in January you will see that it actually, this is a December snapshot where it was negative 33,000, but in January, if you look in the commentary at the bottom, it was a turn of the corner very slightly to 3,900. But what you can see them say there in the very last line is that provided this survives future monthly revisions, it's a welcome break from a long string of monthly declines. So while this environment affects the overall temperature of the macro environment, I'm going to share with you what gives us a lot of confidence and excitement about what's ahead, and particularly in our pipeline, and tell you a little bit about how it impacts our partners. I would say that our partners who are in the staffing industry, have big staffing parts of their businesses, they will feel the reverberations of this more greatly than we, where we get the opportunity to start to stride into the large clients that we have brought on in North America from what is actually a starting point of no placements to stepping out across their programs. There's still tremendous upside for us. There's nothing but upside for us because we're not starting from a place of having a baseline like many of our partners where they're putting in a lot of placements already. We're starting with no placements and working our way up. And I'm going to share with you a little bit of interesting math around that that gives us a lot of optimism. So while the overall environment isn't shifting dramatically, we do have our plays within direct sourcing that we see meaningful upside and that we continue to work very, very hard against. So with respect to our partners, we see the SAP partnership really activating, and now have 8 SAP SuccessFactors deals with SAP globally and 4 Fieldglass deals. And this is creating a really nice dialogue for us with SAP as they're kicking off their year as well. They're incorporating a lot of the LiveHire success stories into their kickoffs. And there's a lot of team meetings happening right now with their teams as they start to set their path for the year and they start to stride to their goals. And we're a key part of that. With TapFin, as Andrew mentioned, we have a phenomenal partnership and a lot of gratitude for the way that they engage with us very, very openly and actively across their client base. And we've done a lot of intersection of their clients with both the SAP Fieldglass VMS, which is on the left side of the slide, and the Beeline VMS, which is on the right side of the slide. So their clients, because we're integrated into both, this opens up their whole portfolio of clients. We're very excited to have achieved one of the most comprehensive or the most comprehensive integration level with Beeline, and we're going live with our sports retailer, our global sports retailer, right now this week. So very exciting milestone for us there. As we think about direct sourcing, these are slides from Ardent Partners, and this is just again rounding out on the macro environment and why our partners continue to see the importance of technology for what they're bringing to their clients. There is a continued demand for workforce flexibility and scalability. This is where LiveHire comes in. Candidates with required skills, this is where LiveHire comes in. And according to Chris Dwyer, the impact of direct sourcing is being seen even more in the current environment where there is still a drive for efficiency to improve cost savings. So whatever's happening in the macro environment, the importance of the direct sourcing conversation remains. We're thrilled that our pipeline went from 37 to 40 over the last quarter, with 5 in late stage in each of the quarters, even after we converted the large medical health care company. It's interesting because Chris Dwyer has made his big prediction that direct sourcing hits a tipping point. In his words, it's been the biggest topic in the last 10 years in the space. So we know we've had a lot of conversation with all of our shareholders and the market about this. What he means by that, and I think this is a really good way to put a point on this, is that it's the year, in his view, that companies really start to adopt at full scale and end to end. So a lot of times up to now, there have been toes in the water or sort of very ring-fenced kind of experiments with respect to direct sourcing. And so this has been something we've been leading on for quite a while in terms of how we define an ICP or an ideal client profile. Those clients who are willing, interested, and will lean into an at-scale implementation, which is where our technology really thrives and really brings to them those cost savings. So I think that's great that he is making that prediction. And it's just a consistent theme from the conversation that we've been having for quite some time. What I like about the scalability point that he's making is that we have been profiling clients who are taking this on at scale. So everyone from the medical device company that we've just signed to the sports retailer to this wonderful case study that we've been able to publish with respect to Enbridge, who have gone on record to share their results with 38% of their contingent hires now coming through the program. And I think that that Eric Ostertout, the main contact here, is doing a great job in the market, really leading the conversation with other companies to say, it's not as hard as you think. You don't need to overthink it too much, but you do need to just go for it and implement at scale. So when you read the full version of this case study, it speaks exactly to Chris Dwyer's point around adopt it at scale. And if you're at scale, that's meaningful for the client in the cost savings. It's meaningful for LiveHire, obviously, in our annual contract value that we continue to step our way toward. So let me share with you, I wanted to double back on why, even if and as hiring is down overall, we have the opportunity in these programs that we're in to step up from, again, our position in their programs being no placements in the past to more and more placements over time, even if and as what was $1 billion program for them is 500 million in the current year. That doesn't affect us, because what we are doing is we're stepping into these programs from nothing and ramping. We're really proud and we're working very hard on this. And this is where, again, we see our revenue upside. Our starts in Q1 were 27 on these 3 that we've been tracking. It's not our whole portfolio of clients. It's 3 important clients that we're demonstrating our performance in this pay for performance model, from 27 to then 49. And the way you can think about this is that it's almost, if it's an 80% improvement in the number of placements quarter over quarter, it's almost 100% improvement in the actual ending placements, give or take what placements might come off of assignment in any quarter. And there has been some question about, well, what is a placement worth? And what we're seeing in the data, and this is just really needs to continue to have the kind of scale and volume to be statistically significant, is that each placement's worth about 80 to 120 Aussie dollars to us. So starting to see this inflection point growing quarter over quarter, our placements by something on the order of 80 to 100% is truly meaningful, and starts to bring us into the level of significance of these deals that we always had our eye on, and is built into our plan.
And Christy, just to clarify, that 80 to 120 is per month.
Per quarter is what we're saying here. So 80% improvement in starts.
No. Sorry, the $80 to $120 per position.
Oh, sorry. Exactly. Yes. Per month.
Yep.
That's what we're seeing that it's worth. So that was a question that came up. It is worth noting that this month in particular, there was a brownout at the sports retailer while we did the transition to Beeline. We've just gone live with that this week. And so we'll have to see how the numbers come through, but overall, we're seeing meaningful strides month over month, quarter over quarter, and we're exactly on track with what we're expecting in the kind of acceleration in these accounts and the kind of earnings that LiveHire has off of the success that, again, delivers cost savings in the tens of millions of dollars to these clients. So that's some of our excitement and some confirmation from the industry experts on what we're managing, which I've shared in the past as well. Everything that goes into getting a placement is how we drive productivity through our platform and get to a high level of submissions or a high level of interviews. If interviews have a high correlation with high performance, we know that we went from 240 to 265 in the last quarter over quarter. We'll continue to be driving that. So just sharing all the inputs and insights that we're bringing into our business to manage to outcomes. As I mentioned, we're excited about the opportunity to bring to the Australian market a concept that we've been developing. So at this point, we have a well-developed concept, and we've been in conversations that are advancing quite meaningfully, and they're very positive. It's not in our forecast at the moment, this particular initiative, and nor are we incurring any costs on it as yet, and until we have the revenue showing through in the business. But we really do have very clear line of sight. And the whole concept here, of course, and maybe it's obvious from this slide, is that there is a supply of Indigenous Australian job seekers. We actually have 75,000 of a total market of 300,000 in the LiveHire community already. And there is demand in corporates for bringing more Indigenous workers into their workforce. So the LiveHire talent community concept, the ability to create a bespoke community for this group across Australia, and to bring companies together with a better way of engaging that particular audience, is where LiveHire has built a concept that also has a partnered service company who would support the delivery of this to the corporate. So lining all of that up and thinking about how it works from a technical standpoint, this is a different use case, even though all the piece parts of the LiveHire capability are incorporated in the concept as we start to go out and gain insight from the market. And what's powerful and what's possible is that LiveHire has already proven through our platform and through the candidates we do have on the platform that we improve the disparity in the placement rate. So we're placing at about 7 points higher. That's the first bar there, Indigenous candidates into jobs. And we also improve the level of pay rate that these workers have, and that's about a 5-point improvement. So if you flow all this into the economy and what's possible for the country and for the Indigenous community, it's upwards of $1 billion in income that can be brought to that community if we start to lift, to the tune of 20,000 more employed and at higher pay rates. So it's a really wonderful ambition that we are receiving a lot of positive support for. We're grateful for some of the shareholders who have guided us to really take a look at this. And when we looked in the data, it was more than pleasing that our platform is performing so well in support of this social mission, which we are excited to share more about as we continue to deepen the conversation with the corporates on this. And finally, with respect to product and technology, it's been a very, very busy period, and some phenomenal productivity out of that team. And I just want to thank Jennifer Byrne and the whole team for driving continued positive feedback from our users, the Beeline and Fieldglass integrations, which is fueling our North American business, and the outcomes that you see there. 11 new features, 32 feature uplifts. And I know there's often conversation or questions about AI, and of course, we are leveraging AI and working toward what it means for our platform. It's an enabler for things like improved productivity for recruiters, which is something that we're actually already known for and we're always driving into. So where it has that impact, we are incorporating it. So that's the live AI, and how that drives as well the candidate communications and matching. So that's the summary from the quarter. As I said, we're very excited about the milestones and the journey that we're on, because we are seeing the results of what we've put in. We're seeing the outcomes with the clients, and we see very clear line of path to the break even that we've committed.
Thanks, Christy. I just want to add one couple of final comments to top and tail this. Is those advances in the product and technology space are really quite extraordinary in the context of how many resources that we've had to remove as part of the strategic reset and cost reduction. So, my very strong thanks to Jennifer and the team for being able to achieve that. That's a pretty mean feat. And also to Christy and Ben, because you're at the front line of managing the business again with a very, very significant cost reduction and a very, very tight resources, and the fact that you're able to continue to keep the ship afloat is thank you on behalf of the board and shareholders.
Thank you. Thanks everybody in LiveHire, and
Ben,
thanks shareholders.
Thank you. I think that's it. There were no questions that came through the Q&A. So with that, I think we're there. So thank you everyone for attending.
Thank you all. Thanks, Ben. Thanks, Christy.
Thank you.